Good morning, ladies and gentlemen. My name is Vasil Dikov, Senior Account Manager with GDMFX. I will be bringing you today's daily market outlook. We will start with the North American markets, the events from yesterday, the interest rate decision from the FOMC. There was no change there. They decided to keep it as it is. The capacity utilization was 0.2%, weaker than expected at 76.7%. The industrial production month-to-month 0.2%, weaker than expected at minus 0.5%. The housing starts month-to-month 0.028 million, better than expected. Building permits for the month was 0.033 million, weaker than expected. The CPI month-to-month AE at minus 0.2%. The CPI NSA month-to-month 0.21, better than expected. The CPI core SA 0.7, higher than previous. The CPI year-on-year 0.1, better than expected at 1%. The CPI excluding fuel and energy for the month was 0.1, better than expected at 0.3%. The CPI excluding fuel and energies for the year was 0.1%, better than expected at 0.1%. Where the US Central Bank at its December meeting had a projected 4 rate hikes in 2016, new estimates released Wednesday reduced the number to 2. Fed officials also cut their expectations for economic growth and inflation. With the new projection, the FOMC now sees just a 0.9% funds rate in 2016 and 1.9% level by the end of 2017. The Fed also cut its GDP growth outlook for 2016 from 2.4% to 2.2% and reduced the 2017 goal from 2.2% to 2.1%. Janet Yellen expects the 2% inflation target reached in 2 to 3 years. The Dow was 8 points up, the Nasdaq was 30 points up, the Dixie was down to 95.62 from 96.90. The US dollar was 245 pips down versus the Canadian dollar, and it was 92 pips down versus the Swiss franc. Today we're going to have the initial jobless claims, the Philadelphia Fed manufacturing survey, the CB leading indicator for the month, and on Friday we're going to have the CPI data. In the EU, we are been having some gains on the euro against the greenback after the dovish Fed report yesterday. The euro gained 110 pips with a range of 190 versus the US dollar. Both the DAX 30 and the CAC 40 showed slight gains, and today we'll be waiting for the economic forecast, the PPI month-to-month and year-on-year, the interest rate decision from the Swiss National Bank, and also the trade balance, the CPI month-to-month and year-on-year for the Eurozone. In the UK, the climate count rate was 2.1%. The climate count rate was 8.9 thousand, better than expected at minus 18,000. The ILO unemployment rate was 5.1%. The average earnings, excluding bonus, was 0.1%, better than expected at 2.2%. The average earnings, including bonus, was 0.1%, better than expected at 2.1%. The CB leading economic index was 0.2%. Earnings and employment data show that the Bank of England should not be concerned over the state of the labor market, with unemployment holding at a record low. Average earnings showed slight signs of an increase, but despite this fact, the pound slid after George Osborne unveiled his budget. The Chancellor of the Exchequer introduced tax cuts for large enterprises, introduced new austerity measures, and slashed the growth forecast from 2.4% to 2% for the year and from 2.5% to 2.2% for 2017. As a result, the sterling tumbled from $1.4054 before rebounding to $1.4266 after the dovish report from the Fed. With the overall pessimism over the state of the UK economy and the Brexit referendum around the corner, Mark Carney and the Monetary Policy Committee members have little room for maneuvers in regards to their interest rate vote and are most likely to keep interest rates unchanged today. The FTSE 100 gained 26 points yesterday and closed at 6,200. The pound was 253 pips down versus the Kiwi, 210 pips down versus the Canadian dollar, and it was 90 pips down versus the Aussie yesterday. It also slid with another 165 pips down already. Today is the Super Thursday. That includes the Bank of England interest rate decision, the Bank of England asset purchasing facility, the Monetary Policy Committee interest rate vote, the Bank of England minutes. Mark Carney is also going to be having a speech later on today. We're also going to be having the Bank of England quarterly bulletin and the monetary policy summary. In Japan, the export was 0.9% weaker than expected at -4%. The imports was 1% better than expected at -14.2%. The adjusted merchandise trade balance was 92.9 billion yen, better than previous at 166.1 billion. The merchandise trade balance was 145.8 billion yen, weaker than expected at 242.8 billion yen. The foreign bond investments 640.7 billion yen, less than the previous at 897.3 billion. The foreign investments in Japanese stocks were 1.44.7 billion yen, less than the previous at -1.583.2 billion yen. In China, the foreign direct investments was 0.9% weaker than previous at 1.8%. The Bank of Japan Governor Kuroda said in his speech in Parliament today that it is theoretically possible for the central bank to drag its interest rates deeper into negative territory, -0.5% to be exact. The Nikkei 225 was 111 pips up yesterday. Today it erased its yesterday gains. The yen was 130 pips up versus the Canadian dollar and 120 pips up versus the New Zealand dollar. In the Pacific, on a more positive note, the New Zealand posted an upside surprise with a quarterly 2015 GDP reading. The economy grew with 0.9% during the period, outpacing the consensus of 0.7% growth and maintaining its pace for expansion from the earlier quarter. Components of the report show that growth was driven by gains in business services, construction, retail trade, and accommodation. Agriculture, on the other hand, shackled a 1.7% drop for the quarter. New Zealand current account numbers, a lower than expected current account deficit, helped stem the kiwi's losses after data released earlier reflected lower dairy prices for the country's dairy producers. Current account deficit to 2.6 billion New Zealand dollar lower than the third quarter in 2015. Meanwhile, separate report from the Reserve Bank of New Zealand showed the country's bank remains healthy, at least enough to withstand a decline in dairy prices. As a result, the kiwi showed large movements against its major peers, scoring ranges of 400 pips. In the commodity section, the crude oil stock exchange rose by 1.3 million barrels in the week ending on March 11th. The crude oil futures were up 3% after the bullish weekly stockpile data. Oil futures extended strong gains on Thursday, continuing to gather support after the world's biggest suppliers firmed up plans to meet and to discuss an output freeze. Oil producers, including the Gulf OPEC members, support holding talks next month on a deal to keep production at the current level, even if Iran declines to participate, OPEC sources said on Wednesday. A meeting could increase the likelihood of the first global supply deal in 15 years. The US crude oil rose to a 3-month peak of 39.38 a barrel. Gold futures surged by more than $30 an ounce on Wednesday afternoon. Gold, which is not attached to interest rates or dividends, struggles to compete with high yield-bearing assets in rising rate environments. The S&P 500 index had a range of 25 points up to 2,029 now. The gold had a range of $38 at 1,258 now. Silver had a range of 46 cents at $15.60 now. The crude had a $2.20 range up to 38.92 cents now. Natural gas is trading at $1.88 at the moment with a range of 6 cents. Today, natural gas storage changed on Friday the Baker Hughes oil recount. That was all for me. Thank you and have a nice day.